Good morning, trading world. It is March 1st, 2024, and this is my pre-market outlook and technical analysis for day trading the markets. The title of today's outlook, as you know, as of Wednesday night, I did an update talking about the strange vibes and me updating or adjusting my projections for the week or the end of the week. The title of today's outlook is Readjusted Projection for the Week and how it could be a new swing high for the daily and end up as a new all-time high for some time to come. Whether that happens today or at some point next week, I feel like we're really close to that point. Now, Wednesday night, I redid my projections for the end of the week, and to me, it was right on time. We popped up on Thursday after a delayed reaction from hitting one of my reaction levels. The important part about that Wednesday night update was talking about Thursday's session, and believe it or not, Thursday was more winding up than popping up. The thing that may be a little off in the projection was that we may or may not hit lows of the week this morning. However, there will be a big pullback in which there has been a decent sized pullback pre-market this morning. Excuse me. In fact, I am projecting the pullback to possibly hit down between the 50.85 to 50.70 area on the futures. Now, whether we do that is yet to be seen, but pre-market, we came pretty close to hitting that area, and I'm not quite sure whether we're done or not this morning with the pullback. Again, that remains to be seen. I have to lean heavily on the metrics right now. Some of those metrics aren't available until the market opens, so I have to do my best projecting things. And in fact, let me take a look at one of those projections, or let me kind of peek to another screen right now. I kind of have to project the advanced decline line right now as pushing more and more negative. Right now, I'm projecting the advanced decline line to open at like a negative, somewhere between a negative 380 to negative 385. It could be pretty bad when we open up on the advanced decline line. So that means still pushing low at the open. Now, the trading day could start out looking very bleak with a big gap down, but repairing itself after lunch. Now, usually the new fund flows that hit the market have a profound effect for the first 3 days of the new month, lifting the market throughout that time, With major cycle lows expected soon, it may or may not happen that way. This is when your risk tolerance should be on point by not letting you place all your positions at once, but a little at a time as signs show up, and remembering that setups on the daily time frame and cycle takes about 6 to 8 weeks to play out. So this is how my projected lows line up for the current cycles. The mini cycle expected lows fall between the 29th of February and the 9th of March. The adjusted daily cycle expected lows fall between March 5th and March 14th. The weekly cycle expected lows fall between March 1st and April 15th. The mini cycle has a length of 3 to 5 days and has still been bullish the last few periods. I'm looking for that to change first before it changes on the larger cycles, meaning that the previous couple periods all ended bullishly, higher than they started. So I'm looking for a change to happen where we get kind of a either finish in the same place or finish bearish, where we finish the cycle lower than we started. And then if you remember what I said about fractals, it'll make sense, because looking for something to start on the smaller cycle before it projects to the bigger cycle. Now, if your indicator, whatever your primary indicator that you follow, doesn't bottom out during that period, it's possible that the low did not fall in the current cycle and could be down the line in another cycle period, which is very possible for the daily not to bottom out yet, but to either wait and line up with the weekly cycle, or in fact get halfway down on the indicator in this cycle and bottom out in the next cycle. With all that being said, we are really close to bottoming in a major cycle within the next 6 weeks. However, if you wait 6 weeks to put on short positions, you would have missed the best time to put on positions when volatility is still relatively low. We talk about volatility being that juice in premiums. And even if price levels push higher and you put on shorts right now, but volatility starts to spike higher, it adds juice to that premium. And even though you didn't enter at the highest price level, you enter at the best time premium wise as the premiums start to spike up. And even though you entered not at the highest peak, but because the premium starts to juice up, you don't lose very much as prices continue to go up, because that volatility or juice in the premiums start to add up and kind of push up. So even as price levels continue up, that option that you entered, if you have enough time, it still swells or holds value, even as price continues to go up in the opposite direction of what you need. Now, I still think we may be a week away from the beginning of that big drop starting. If so, get ready for some extreme two-sided trade coming. All right, let's get to the intraday levels and what I'm looking for today. Now, yesterday and last night's move increased the size of the range significantly. Putting our intraday jack support at 50.93. Our queen support is at 50.80 and king support area is 50.71 all the way down to 50.60. On the resistance side of that, our jack resistance area is 51.27, queen resistance area 51.35, and king resistance area is 51.48 all the way up to 51.57. What's going to be strange about today is it's possible we may not even make it up to the resistance areas today. We could spend half the day retracing deep into support levels before reversing midday to pop up into somewhat of a no man's land between 51.01 and 51.27. Don't quite have the 51.01, but it's really close to this red line, so we could pop back and kind of just push up into this area. So as I continue to watch the projected advanced decline line, and it's hovering steady between, we'll say between 375 and 385. That could get us some lows or pushing lower off the open. So by the time we get to the open, we could definitely be pushing lower, and momentum could build up to really push us low fast and get us deep down into the support area, down around this 50.80 or 50.71 area, even down to 50.60 early in the day. And we could get down here, and once we get there, we can start to consolidate, and this could very well take almost half the trading session getting down to this area before we get a decent push or reaction level pushing off down there. Let me see where I have those reaction levels for today. One of the really important reaction levels I have is 50.71. Excuse me. 50.71 is an important reaction level. 50.93 is also an important reaction level. And 50.90 should be up as an important reaction level as well. So 50.90, 50.93, 50.90 down to 50.71. Those are all important reaction areas. And if you haven't heard me say before, reaction areas those are basically areas that I deem fit as good entry points that kind of owe you a reaction. And it depends on the reaction, the importance of the reaction area itself, but it should at least give you a reaction of at least 2 points. And that 2 points should be enough to where you enter, go positive, and you can kind of see how things pick up from there to whether you want to stay in it and see if it goes further, or just get the 2 points, be done, get out, and watch for another reaction level. But usually those reaction levels are where things change or where the tide changes. So if we have a reversal, it usually hits a reaction area, give you that 2 points, start to consolidate, and then we see things start to pick up and change. It's usually where the advanced decline may start to change as well. And that's what you're looking for in order to determine whether you stay in that position, is that advanced decline line changing and continuing in the direction that you're trading. So again, we could really kind of fall the first part of the session and start to kind of pick back up steadily later in the day, back up to levels we were early in the morning and beyond. And this is where we could kind of get in this area and start to see some friction or reversals again up here around that area, somewhere up there. So that's pretty much how I expect the day to go. It doesn't have to play out that way exactly. We could hit the day and kind of push up first. That alternate wave theory where let me erase some of this, but the alternate way things could kind of happen is that we kind of spin sideways for a bit and, quickly pick up to pushing up on the day, and we get up to that 51.27 area or 51.14, whatever it may be, as resistance, and kind of chop sideways for a bit before actually having a large flush back. We can have that large flush back and we get that V-shaped reversal that puts us on track back to get up to pushing up toward highs or the highs that we made earlier in the day. So that's also how the day could be played out. But either way, visualizing it like this, it kind of helps me to be prepared to see things as they happen and react to things as they happen. So something to keep your eyes on is again the volatility. Right now, pre-market, it's falling as prices falling right now. So we may still be a week away from the beginning of that big drop just because of how volatility is reacting. It's just kind of unresponsive at the moment. So you kind of want to keep your eyes on that as well. But I do see us popping back up regardless of what happens during the early part of the session at some point. As I like to always end the session, remember your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you face in each position and in the current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.